Angeline Hard for Elliott Wave TV, and I'm talking today to Jim Martens, Elliott Wave International's Senior Currency Strategist. Jim, first of all, thanks for sitting down for today's interview. I wanted to start off by talking about a call you made on December 2nd in the Euro-Dollar exchange. You identified an ending diagonal pattern in that market and called for the Euro's subsequent rally. Now, your forecast in early December and looking back over the past year, pretty much all year long, have been spot on in the Euro-Dollar. Can you walk me through what the market's done over the past year and how you've prepared your subscribers accordingly?
Certainly, Alex, and it's been an exciting year. It started with the Euro-Dollar making a significant bottom late in the first quarter, back in March. And we saw at the same time the dollar index put in a significant high, and then both put in clearly corrective movements. The dollar index to the downside, Euro-Dollar to the upside, as we would expect, all the way through August. So lengthy movements that corrected the prior decline from May 2014. So these are significant trends and significant turns that we saw that lasted many months. And the one last week, the latest call, was fairly easy to spot. As you mentioned, it had the ending diagonal, which is, as I said, as it's named, an ending pattern. We also had the Euro-Dollar coming down to a measured objective near 105. It got as low as 105.33 right before the ECB made an announcement about cutting rates over there once again. So the market, or the press, saw that move as a reason for the euro to rally, but we saw the reasons for that rally well before the announcement was made. And we had suggested to our readers that the rally would probably start right around the time of the announcement. So instead of the announcement causing the movement, it was just coincidence that the timing was just right. We had the ending diagonal, we had a measurement coming in at just where the market bottomed, and then the meeting itself. So it was a fairly easy call from our point of view, and a significant one that saw the euro rally almost 3% in just a couple hours.
And you recently returned from speaking at a Forex event in Moscow, Russia. Tell me a little bit about your presentation and that conference as a whole.
Well, it was a significant conference, plenty of attendees, and they were very excited about the wave principle. And of course, I was glad to see that. I fielded many questions before my presentation began and after. And during the presentation, I was just talking about the wave principle, but generally what it's measuring, and that's measuring crowd psychology, because that's what we think moves the market. So those of our viewers that have been following my work for quite some time might remember in Euro-Dollar, we followed a multi-year contracting triangle pattern that ended around 139, 140 back in May of 2014. And I used that pattern to show that in each major turn, that there were magazine articles and the sentiment was looking the opposite way. It was looking for a continuation of the prior trends instead of a turn. So it was a demonstration of how the market usually, the market shows crowd psychology, and when that psychology reaches an extreme, it's time for a change. It was well received, and it was a great trip, and I hope one day they'll invite me back, because there's plenty to see in Russia.
And Jim, the last question I've got for you today is, we look towards the end of 2015 and into the new year in 2016. I was hoping you'd give me a preview of what you're expecting in the currency markets over the next couple of weeks.
Well, it's a critical time between now and the end of the year. We mentioned already the Euro-Dollar rally, dollar decline, and it's right up against significant levels. And if the Euro-Dollar climbs just a little bit more, I'll have to change my view a little bit. We've been bearish for quite some time, and correctly so. And what we'll have to do is change our view and delay the bearishness probably until later in the first quarter of 2016. We'll delay the timing of the next leg down, not our bearishness overall, but it'll make for a great environment with plenty of opportunities for the next several months. And again, I hope that question, whether that change will be made, will be answered within the next 2 to 3 weeks.
Well, thanks, Jim. I know you're a busy guy. You publish intraday updates all day long for our Currency Pro service, so I appreciate you taking a couple of minutes to squeeze this interview in.
My pleasure, Alex.
To learn more about Jim Martens' forecast and analysis, please check out the link below. Thanks for watching Elliott Wave TV.